JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 7th of July 2021. So welcome everyone. Welcome to this Wednesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the chart, so a quick update here. So basically there's a bit of confusion around going around in the equity markets. So a bit of disbalances, and these are the moments where we need to be a little bit careful and a little bit cautious, because basically yesterday we saw, of course, a huge decline in the US equities, but then a quick recovery back up. But I'll get to the US indices a little bit later. Now let's say with the Nikkei, you can see that the index drifted below that 28,565 territory and stayed below it, although there was a bit of recovery here at the end of the trading session. But for now, looking at this picture, I mean, this kind of points a little bit more towards the downside. So that's why I would say I will be very careful for now, very cautious, and certainly even if we push a little bit higher here, I'll keep an eye on this barrier, this 28,565 territory. If it provides resistance together with the 100-day EMA here shown as the green line, then yes, another slide could be possible. It might not even travel here. It might just continue drifting lower straight away, and in that case, either way, I mean, my next target is the 27,795 territory right here, marked near the low of the 21st of June. Slightly below that, you have the 200-day EMA, which could also play out nicely. Now jumping into Shanghai Composite, and this is where we see a bit of an opposite situation, and yeah, the index rebounded from the lower side of this little range that I talked about previously, and as you can see, we rebounded. Yes, we moved higher, but we stayed below the 21-day EMA. That's why I said to my preferred breakout level for the upside would be somewhere around here near the 3,570 territory. If we clear that and stay above that, then yes, we could consider maybe a move towards the upper side of this little short-term range. And then of course we would take it from there. For now, I mean, we will, I would say, again, this is where it's becoming difficult, because one index traveling higher, the other one lower, and it's a bit of a kind of an unstable situation right now. And of course, some of the market participants are already getting worried in terms of that. Did the kind of the indices reach their peaks already? Maybe. So again, that's something to continue to monitor. Don't get me wrong. I mean, these talks have been kind of happening even a few months ago when the markets were booming and we were clearing higher levels, and basically, yeah, that's why probably this kind of these talks around what is this the peak already? I mean, probably we should leave those and just go with the flow, go with the go with every day, and just basically for now, even looking at Shanghai Composite, although it's pushing higher, unlike the other indices here, maybe we would need to see at least a push above the 3,570 territory in order to get a little bit more comfortable with the upside here. But again, this upside could get limited near this upper side of the of this little range here. Hong Kong's Hang Seng Index, and here we have another difficult situation. Here we have an index which broke the lower side of the rising channel, and most importantly, it's still currently trading below the 200-day EMA. So this is where a bit of concern is happening. I mean, will we be able to get back inside this rising channel? Probably. One thing to keep in mind, of course, is not only that you need to look at the daily chart, but also look at where the week is going to end. Because at the moment, yes, we're getting that break here. We got the break already, and we're currently trading below the 200-day EMA, but will it get back inside this rising channel by the end of the week? If not, and if we see the weekly candle staying below this area, well, basically we could see maybe further declines going into next week. So something for you to keep an eye on, a bit of food for thought. But in general, it's a very interesting situation right now in the indices, with the indices. So, yep, be very careful. Probably examine those on an individual basis, and then we'll, like I said, then probably would be. This would be the safer bet. So at the moment, like I said, with this one, with Hang Seng, it is a tricky one here. I'm leaning a little bit more towards the downside. However, again, it depends how this week is going to trade. So yeah, something for you guys to keep in mind. Also, let me just quickly double check the economic calendar if I'm not mistaken. Yes, so we have the FOMC meeting minutes today, so keep your eyes on those. That's where it could become a little bit more interesting if the Fed will decide that, further, well, actually not, it has been already decided, but if the minutes is just going to confirm what the Fed already kind of mentioned, then certainly maybe a bit of a recovery here, back up could be possible. However, let's not rush into anything. Have a look at the FOMC meeting minutes after they get released, and of course keep your eyes on the US markets. Then we'll see what we can do after from there, going onwards from there. So the German index, there we go. So broke the upside line. So in a way, there is a bit of indication that lower levels could be met, but as you can see, this is where I keep saying all the time that wait for a certain confirmation break here, or a violation of one of the levels, and basically here what we got is a break of this upside line, but we didn't really get a drop and a closure below the 15,456 territory, the one that I spoke about in my recent videos. So we got the break of the upside line, but we didn't get a drop below this. So we need that drop below that hurdle in order to go for some lower areas. And looking at the cash index right now, you'll see that the price is currently trading at around 15,550 territory. So above yesterday's close, closer to the upside line. So yep, in a way, that's where this hurdle comes in. If we eventually do see that break below this, then yes, we could go for lower areas. Now, jumping into Ibex, something that I looked at recently, and I told you to keep an eye on this downside line taken from the high of the 15th of June, and as you can see, why? It continues to provide decent resistance. So, in order to aim for lower levels, well, I would still take a bit of a careful and cautious approach here, and I would wait for a drop somewhere below this 8,765 territory marked by the lowest point of June, and at the same time we would see a lower low and a drop below the 100-day EMA, and then of course we could start aiming for that 200-day EMA. But for the upside, previously I talked about this level, the 9,107 territory, but the further we go to the right and to the downside, the lower the potential breakout level for the upside could get. So basically for now, for the upside, what I'm going to be looking at here is at least a push above the 8,965 territory, somewhere around here, marked by the current highest point of this week. And if we clear that, then yes, we could maybe consider a bit of a move higher. The S&P 500. So yesterday we created a new all-time high, by the way. So the previous one was here, around 4,355. The new one was around here, just fractionally above it. So the 4,356 territory, approximately around there. And yeah, you can see that yesterday the S&P closed in negative territory, but it could have closed even in more with a bigger loss, basically. But at the end of the day, I mean, the markets did pick up. I mean, we did get some bad economic data yesterday from the U.S., but so the services PMIs declined, and the ISM non-manufacturing PMI declined as well. But again, probably the reason why we had this little nice rebound back to the upside is that basically, first of all, that the numbers still remained well in expansionary territory. So that's yeah. So that shows that although we had a lower than the forecast number, but still the actual figure remained the actual figures remained in expansionary territory, which means that basically just we might have seen just a slight slowdown in the production, but also the fact that if the Fed will see these numbers as a bit of worrying, then yep, the continued support could still happen, and rates could remain longer, maybe lower for a little bit more, or sorry, lower for a little bit more. But again, if we will start seeing some sort of consistency in the economic data, basically in terms of declines, so a consistency in declined in the drop of data, then this is where we should start getting a little bit worried, and well, the equity markets could probably adjust accordingly as well. So at the moment, yes, I would say that we look quite overstretched to the upside. However, we could have, said these things a while ago. I mean, yeah, we might be due for a bit of a corrective move lower. However, for now, I mean, still the trend is to the upside, guys. So yeah, don't kind of, let's say, panic too early. The DXY, the dollar index. So we had a nice reversal here. Of course, the dollar index popped higher. It was seen as more of a safe haven, and that's why we pushed north. We came closer to this downside resistance line taken from the high of the 25th of September. So yeah. Basically, at the moment, if you want to aim for some higher levels, guys, on DXY, you need to wait for a push through this downside line and a push above the high of last week here near the 92.74 territory, and then we could go for some higher levels. But at the moment, it could still provide resistance. I mean, this downside line could still get a hold up here. DXY could get a hold of here, but that's why my preferred downside scenario. Now, previously I talked about this level, the 91.51, but now probably I will keep an eye on this little target right here. The low of yesterday near the 92.30. Sorry, actually 92 territory. Yep, there we go. So we're approximately around here, the 92 zone. If we get a drop below that, depending on how this is going to shape up, maybe we could also get a drop below the 200-day EMA. And yep, further declines here could be possible, but by further declines I mean a bit of a larger correction to the downside, because don't forget that we're still trading above this upside line here, taken from the low the 25th of May. So either way, guys, we need to kind of wait here for now. Although everything looks quite tempting, but I'd rather stay safe than sorry here. Then yep, I need that confirmation breakthrough, one of those levels that I just mentioned. Gold stuck near the 1800 level. This is what I talked about from the beginning this week, guys. That holdup might occur somewhere in this area near the 1800 or maybe the 200-day EMA, or even this downside resistance line taken from the high of the 7th of August of 2020. So yeah, for now, I mean, if this gets a hold up here and if this area continues to provide resistance, then certainly another slide could be possible, especially if DXY starts popping heavily to the upside. Silver, similar story, also came close to this this upside line. This is what I talked about yesterday, if you remember, in my video. Yep, we got a hold up near this barrier, the 26.73 territory, and then we reversed back down. So now, looking at this picture, I'm still kind of leaning a little bit maybe towards the downside, but unlike with gold, I would prefer to wait here on silver. I would wait for a drop below the 25.71 territory, and then yes, we could aim for lower levels. Now jumping into WTI oil, and okay guys, this is what I talked about yesterday. I said to you, keep an eye on this one, because again, everything was way too good to be true. I mean, for the bulls, and yep, that's the kind of the moment we had here, and we saw a decline, a huge sell-off after we tested the 76. Let me just quickly grab this level here. After we tested the highest point of 2018, and that level was approximately around the 76.88 territory right here. So long story short, we drifted lower, and now the big question here is, can we see a bit of a decline here? However, as I mentioned before, for the downside, what I need here is not only a break of this upside line, but also a drop and a daily candle body staying below this 72.70 territory right here. At the same time, we would maybe see a drop below the 21-day EMA, and potentially more sellers could join in. So keep that in mind, guys. So Ripple. Ripple is an interesting one here, and probably let me start fresh, because there are way too many lines which could be a little bit more confusing, but now let's have a look at it from a different perspective. So first of all, we have a crypto which is still trading below all of its EMAs here on the daily chart. So that's one thing. So that's one bearish aspect of it. Another bearish aspect is the fact that we're still trading below this downside resistance line taken from the high of the 14th of April of 2021. So yeah, another bearish indication. However, given that there is quite a bit of a distance here between the line and the current rate, maybe a push higher could be possible. However, to consider that a larger correction to the upside, what I would like to see here is maybe for a push above this barrier. No, actually, let me just have a look at this one, because there's a bit of a confusion here. So we'll start looking at the upside if we clear this barrier, the 0.7339, but probably more, maybe more buying activity could come in on a break of this 0.7935 territory, which, as you can see, acted as a good area of support previously, and it kind of also coincides with the 200-day EMA. So maybe this little area here could work out for the bulls, and if we clear this one, then of course the next target is the 100-day EMA here, shown as the green line. But if that continues to push higher, then yes, of course, the next target is this downside resistance line. Now, jumping into AUDCHF, so one of those scenarios where I said that wait for that daily candle to end, and this is a perfect example. I mean, perfect example of why you need to wait sometimes for that daily candle to finish. Although you see that yesterday was very tempting that higher levels could be met here because we broke the downside line, we broke the 0.6981 territory, but the daily candle still ended up drifting not only back below this hurdle, but also back below the downside line. So again, the downside scenario is back on the table, and we could see this this pair now drifting lower. However, as I mentioned before, for the downside, what I need here is a nice good drop and a daily candle staying below the 0.6892 territory right here in order to, go for further declines. USDJPY, and yeah, this one here is also quite an interesting one because we are trading near this upside line. We had a nice little rebound from here. So far I'm kind of still sticking to this idea of seeing maybe USDJPY rebounding and pushing higher, but now at this point in time, probably to be the safer option here would be to keep an eye on something like this. Then if we climb back and stay above this 111 territory, yes, we'll aim for the upside again. If we don't, and instead we break the upside line and fall below the 110.42 territory, this is where it could become very interesting for a few more sellers. Quick update on USDCAD. USDCAD is pushing nicely to the upside, certainly getting fueled by weaker oil and the stronger dollar. And we're still watching this area. And if you remember, a while ago when I was covering the USDCAD, I said that after we had this little decline, I said the pair might get a hold up somewhere around here, and if it does that, we could see a nice rebound back up. And look at this. I mean, worked out nicely. So now what I'm going to do here is I'm going to stick to this little barrier, the 1.2487. If we clear that and we see the daily candle staying above it, then yes, we could go for some higher levels. US dollar against the Turkish lira. This is something that I look at occasionally. I mean, first of all, let's get rid of all the drawings. And first of all, as you can see, we have reached an all-time high here. And I mean, that was reached back here in June, at the end of June. So that level is around the 8.7992 zone. So if you want, you can round it up towards the 8.80. The pair is now stuck here, I would say. I mean, looking at, if we zoom in here a little bit, we'll probably see a nice little coiling up situation happening, and that means that yes, we could see maybe a nice little breakout eventually. So but we need to wait for that, guys. So don't rush into anything, although we are very close to the upper side of this little triangle. Don't rush into anything yet, because like I said, wait for that confirmation breakout, and then we could react accordingly. GBP CAD also pushed nicely to the upside, got fueled by weaker Canadian dollar. This idea that I spoke about previously, that if we get a hold up near this downside line, then another slide could be possible. Instead, we got a break through that downside line, but we didn't really get a break through the level that I was actually watching, and this is my preferred barrier after which we could go for the upside, and this level is the 1.7260 territory, marked by the high of the 21st of June here and the highest point of June. And if we clear that, guys, then yes, this will confirm a forthcoming higher high. Euro against the ruble. So if you remember yesterday, I've mentioned this one, and I said to you that if oil starts weakening, then we could see euro ruble pushing nicely to the upside. And well, I mean, that's what we got. So great kind of achievement here. I mean, we broke the downside line. However, we did fail to stay above the 200-day EMA together with the 88.21 territory right here. So I need that strong move above this barrier in order to go for some higher levels. And finally, Euro USD. Beautiful reversal here to the downside. As you can see, we've managed to stay below the 1.1847 territory right here, and that means that basically now what I'm going to do here is I'm going to aim for lower levels. I'm going to aim for that 1.1794 territory initially, and then I'll take it from there. I'm not going to drag this one way too much to the downside because I want to see if this area actually will provide support. If it does, then we might see maybe a bit of a rebound, but if it if it doesn't, well, I mean, my next target will be the lowest point of March near the 1.1704 territory, and then we'll take it from there. So guys, that's it for this session. I hope you found it useful, and thank you very much for watching and listening, and I really appreciate your likes, guys. I really do. So thank you for that. Thank you for your time. Have a wonderful trading day. Stay safe, and I will see you later. So, in terms of later, tomorrow, join me tomorrow at my Traders Espresso, 6 o'clock GMT time. Have a fantastic trading day, guys. Bye-bye.